Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin dominance in 2025, an encore. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. A fair warning, my Bitcoin dominance videos do tend to run a bit long. So I do apologize for that, but it is a way for me to just get all of my thoughts out about the subject in a single video. If you're new to the channel, my general argument is that Bitcoin dominance is the key to unlocking the secrets of the cryptoverse. And I do not say that lightly. Unfortunately, if you are new to the cryptoverse, it will be hard to fully understand the importance of Bitcoin dominance. I think the only way you can truly appreciate it is to go through a 4-year cycle, right? Every single year, and live through it. And then you will begin to understand why Bitcoin dominance is so important. If you join crypto in a post-halving year, Bitcoin dominance will not appear nearly as important, okay? So try not to use this year necessarily as a reason to use it or not use it, but I would implore you to at least track it over the next several years if you are new to the cryptoverse. If you're also new, basically, the viewers of this channel, we went on a fairly long journey with Bitcoin dominance, where back in 2022, really even at some point in 2021, I believe in May of 2021, we called for Bitcoin dominance to go on a very long journey back to 60%. Now, the reason we said 60% was a conservative milestone, right? This was a conservative milestone. This was always, sort of the easy move to capture. And yet a lot of people fought it every step of the way, right? Every step of the way for the last several years, there was constant calls for alt season and constant calls for Bitcoin dominance to drop because the chart looked so bad. Well, we look back on it all these years later, and we recognize that the Bitcoin dominance truly was in a historic uptrend. And so we called for it to go to 60%. So why did we say 60%? Because it's important to kind of understand where the 60% number came from to figure out, is it relevant? Is it not? Could it go higher than 60%? Or really is that 60% level going to be the top? And so where I came up with the 60% target was just sort of thinking that in any cycle, at some point during the cycle, you begin a bubble with altcoins against Bitcoin, right? An alt Bitcoin bubble, if you will, where altcoins start to durably outperform Bitcoin. This tends to happen sometime in the post-halving year, which is the current year that we're in, right? It's the current year that we're in. So basically, what I think it makes the most amount of sense to start with is just figure out why 60% was the level at all to begin with, right? Why was it the target? For me, it was the target for this reason. Maybe a silly reason, but I just figured that by the end of 2021, when dominance was unable to take out the low of 2017 and early 2018, and really even in 2022, it made sense for the bubble to unwind, right? The bubble of altcoins against Bitcoin. Now, a lot of people had a very difficult time believing that altcoins were even in a bubble against Bitcoin, right? But if you were in the market over here, you knew that Bitcoin dominance really was extremely low down here, and there's all the reasons in the world for it to go up. Now, that was the reason where 60% came from. Later on, I found another reason that gave me confirmation bias, right? It gave me confirmation bias, and we all want confirmation bias, right? At some point in the market. In fact, even when you watch a YouTuber or anyone provide an opinion about the market, a lot of times you're not really interested in what they have to say, right? Let's be honest, right? You're not really interested in what they're saying. You want to hear your opinion come out of them. And if your opinion doesn't come from them, then you get mad at them, right? That's what we all really want. We want to hear our opinion through the voice of someone else. So it confirms our bias. And so this was confirmation bias, right? I'm like, well, last cycle, Bitcoin dominance retraced to the 618. So why wouldn't it do the same thing this cycle? And it just happened to correspond to 60%. So it was very easy to call for 60% dominance. Now, it did not feel easy. The journey was very difficult, right? And you might wonder, like, why spend so much time talking about Bitcoin dominance? As an investor, at all times, it makes sense to know, where do you get the best risk-adjusted returns, right? If you're going to allocate capital somewhere, where do you want to put it? And if Bitcoin is going to outperform the collective altcoin market, then it makes a lot of sense to just keep most of your portfolio just in Bitcoin. That doesn't mean that you can't dabble in the altcoin market. Every cycle, there's some alts that outperform Bitcoin. But it means that, keeping at least 50%, 60%, 70%, or more, even 90%, or even 100% of the crypto portfolio in Bitcoin during the obvious Bitcoin dominance rally, it's at least a way to preserve your Satoshi valuation. Now, if you're looking at a Bitcoin dominance chart, it does not tell you exactly, where the bear market starts and ends, right? It does not tell you that. Last cycle in 2018, the bear market started here and the bear market ended right there. This cycle, the bear market started in November of 2021, so it started right here, and then it ended a year later right here. So Bitcoin dominance in and of itself doesn't really tell you when bear markets begin and end, and it also doesn't really tell you when the bull market starts. But what you will notice is that both bear markets that occurred started when Bitcoin dominance was pretty low, right? When it was pretty low. And it makes sense, because when the frothier stuff starts to come to the surface, Bitcoin corrects, right? When the money gets misallocated and goes more towards projects that don't deserve it, that's what usually ushers in a bear market. So it's important to recognize that, right? It's important to recognize that. Now, here's the thing, though. Here's the thing. If you can train your mind to value things in terms of Satoshis, then Bitcoin dominance is everything in investing, especially within the Cryptoverse. It's everything. If you can really train your mind to think in terms of Satoshis. A lot of people say that they think in terms of Satoshis, but when the market drops, right? I mean, people say they value their portfolio in sats until the market drops 10%. Then all of a sudden, they no longer value their portfolio in sats. They value it in US dollars, right? But if you can reach the point where you truly value your portfolio in sats, where you see sort of the future of Bitcoin, you recognize there's likely going to be 70, 80% drops in bear markets, and you're okay with that. And you just kind of recognize that, hey, it's a risk. There's going to be some bad times. There's going to be some good times. But if you denominate your portfolio in sats, that's how you get ahead over a long enough period of time. As long as you can deal with the bear markets and not let them, spook you too much, right? You can at least get through it if you value your portfolio in Satoshis. A lot of people don't do that. But if you did, I think you'd be doing much better today than if you hadn't, right? So, I mean, imagine, back in 2021, I converted, or really it was early 2022, I basically converted a lot of my alts to Bitcoin. And I said, I'm just going to stick with Bitcoin until dominance is at 60%, right? And I told you guys back then, I'm like, look, by the time this dominance rally is over, a lot of these altcoins are going to be but a fraction of their former selves, right? They're going to be a shell of their former selves. They're not going to look the same. They're not going to feel the same. You're not going to want to touch an altcoin with a 10-foot pole. But the reality is that even though dominance is at 38%, it's going to 60% whether you like it or not, right? That's just the most likely outcome. And it needs to happen so that the Cryptoverse can begin to heal. And so throughout 2022, 2023, and most of 2024, I did something I don't normally do, and that's be deterministic. too deterministic about something. Now, I think there are times certainly where I am deterministic about certain outcomes. I like to be open-minded to different outcomes and present different outcomes. But with Bitcoin dominance from 2022 until it hit 60% in 2024, I was very deterministic about it, right? Maybe even too much. And I wrestled with it sometimes. Like, why am I being so deterministic about this thing? But it made sense, right? It made the most amount of sense to stay deterministic about it because it was always going to be the most likely outcome to unwind the bubble of alts against Bitcoin. And you can see that it was unwound, basically. And we'll talk about that. Now, in post-halving years, it does not make as much sense to be that deterministic about Bitcoin dominance, right? If you go into 2025 saying that it's going to go up the entire year, right? That Bitcoin dominance will go up the entire year, there's a good chance you'll be disappointed. And so, it's almost like you have to rewire your brain to a certain extent to start thinking about the market differently. And it's weird because it happens every post-halving year. Now, sometimes it happens in January, and then other times it takes longer. 2021, dominance collapsed in January, but in 2017, dominance didn't collapse until later in the year. But it's almost like you have to rewire your brain to think differently, to sort of, think about what has been for the last 3 years and think how easy it was. And I told you guys the easiest part of the cycle is just the Bitcoin dominance rally part of the cycle, which conveniently for us lasts approximately 3 to 3.5 years, right? That's the easiest part because all you have to do is just stick with the king. And generally good things happen, right? Now, as you get out into the post-halving year, it does not make nearly as much sense to stay deterministic about Bitcoin dominance path, right? It does not. That doesn't mean that dominance can't go higher. In fact, last cycle, the high for Bitcoin dominance was set in the post-halving year. It was very early on, but it was set in the post-halving year in very early January. That's when Bitcoin dominance had that spike, and it even went above where it had gone when QE began in September of 2019. So then it sort of raises the question, well, what's going to happen with Bitcoin dominance this year, right? And by the way, if you're not familiar with sort of the 4-year cycle as Bitcoin dominance behaves, what you'll notice generally is that in post-halving years, the big red candles here, 2017 and 2021, that's when Bitcoin dominance goes down. In 2018, 2019, and 2020, dominance went up. And in 2022, 2023, and 2024, dominance went up. You can see that in 2021, dominance technically wicked above the prior highs. So I wouldn't completely dismiss that idea for it to go higher. But with that said, I do believe there is a strong likelihood that at some point this year, we will see Bitcoin dominance drop a considerable amount. Now, here's where it gets kind of interesting, right? It's where it gets a little interesting. How's this going to play out, right? How's this going to play out? And is there more than one way to look at the market to make it to make it seem like it's not as obvious as it might seem just by a cursory glance, right? If you just look at it very briefly, it'd be what makes the most sense to say dominance is going to go down in 2025. I don't know when, right? But likely at some point. But there's one issue with that, right? There's one issue with that. And this is where I think it makes sense to not be deterministic, right? Now, the first thing I will say is that, and I have to repeat this, because if anything, ETH Bitcoin has taught us this, right? I mean, ETH Bitcoin continues to be stuck in traffic on Struggle Street. Why? Why is it? Why are so many altcoins? Why do they continue to struggle against Bitcoin? For the most part, not individually. Some alts are doing just fine, but collectively, why are they struggling so much? Well, I think one reason, and this could change, right? It could change, but one reason I believe is because quantitative tightening never ended, right? And last cycle, and by the way, it could end, next week if Jay Powell wants to throw the degens bone. he could end quantitative tightening. But there's no guarantee he's going to do that. So we're going to have to take this 1 week at a time. In 2025, it makes sense to sort of respond more to what's actually going on. And therefore then talking about how Bitcoin dominance will react rather than just being blindly bullish on dominance because it was not a post-halving year, right? So last cycle, technically, dominance topped when QT ended. See that? When quantitative tightening ended, Bitcoin dominance topped. When QE began, Bitcoin dominance went down. Now, it did sweep the high eventually on a Bitcoin parabolic rally, right? But the issue is that, and I think the reason why you've seen a lot of altcoins really struggle on their Bitcoin pairs for a majority of the cycle, quantitative tightening never actually ended. Now, a lot of people joined crypto in 2020, right? Raise your hand, right? Are you class of 2020 or 2021? It's a good class to be in, right? It's not a bad class to be in. You've learned your lessons. You're making better moves now probably than you were in 2020 and 2021. You're learning the game. But here's the thing. Has this cycle to you at all felt different than last cycle, right? Does it feel different? In one way, it shouldn't, but in another way, it should. In the way that it should not feel different is if you look at the market cycle ROI, or return on investment of Bitcoin, you will notice that it's kind of doing what it always does, right? In fact, if you look at the 2016 cycle, it's basically tracking it almost perfectly, right? So in that sense, this cycle shouldn't really feel that different than prior cycles because in both prior cycles, right, the market was generally trending up right around now. But where it likely feels different is within this metric that I think is underrated. It's called the Advanced Decline Index, and we have it here for the top 100 cryptocurrencies. We also have it for the top 10 and the top 25, but we have it for the top 100 cryptocurrencies. Now, a lot of people joined crypto in 2020, right? People were locked at home. You had money printing. The markets were going crazy. You could put up 1,000 different cryptocurrencies on a board, throw a dart at it, buy that one, and you're likely making money, right? The good old days, right? The good old days. Alt season, if you will. But back then, by the way, you might want to know what the ADI is. You can pause the video right now and read the description and the usage if you want. But basically, it's basically just helping you figure out the number of assets advancing versus the number declining, meaning over that day, how many assets within the top 100 are going up in price and how many are going down. And if more are generally going up than down, then the ADI goes up. If more are going down than up, then the ADI goes down. So if this bull market has felt differently to you than the last cycle, it's because it has, if you joined in 2020. Because in 2020, all you really saw was Bitcoin go up and altcoins generally outperform it for the most part, right? Except for that Bitcoin dominant spike at the end of Q4 of 2020 and early 2021, you generally saw altcoins outperform Bitcoin. And going into 2022 and 2023 and 2024, so many people were like, well, you know, why would you buy Bitcoin? Why wouldn't you go buy Ethereum? Because it outperforms Bitcoin in the bull market. Why buy any altcoin, right? Or why not buy all the altcoins and ignore Bitcoin because Bitcoin's not going to do as well as the altcoin market? That was the general thesis and why so many people did not agree with Bitcoin dominance going to 6%. And they're like, well, there's no reason to buy it because it's not going to outperform the altcoin market. And it's certainly not going to outperform ETH. And when I said that ETH Bitcoin would likely go to the 0.03 to 0.04 range, it was met with a lot of hate and criticism. But here's the thing. You're absolutely right. This cycle has been different if you're comparing it to 2020 and 2021. See that? ADI was going up. Here, the ADI was going down. But what do you notice about this? What do you notice? there was a phase last cycle where the ADI was also going down for a long time, right? But why last cycle did the ADI bottom here in early 2020 and late 2019, but this cycle, it never really stopped putting in lower highs? I mean, this is still maybe a lower high for all we know. And this right here back in September 2024 was a lower low. Why is that? I think it has to do with quantitative tightening. And this was the argument for another reason why it made sense to just be bullish on Bitcoin dominance, because quantitative tightening will make people put their money more so into safer investments like Bitcoin. Now, I know some of you degens are screaming at your screen right now. You're like, well, you've been in the trenches buying meme coins. Great, right? I mean, good for you. I hope you make money there. I really do. The thing is, it's been a really interesting cycle. You've had Bitcoin do really well. You've had meme coins do really well. A few alts, and then a lot of the stuff in between just kind of has sucked, if we're being honest, right? I mean, even Ethereum, if you think about it, I mean, it still hasn't even hit a new all-time high. And we're already almost through January of the post-halving year, right? What's going on? I think a lot of it. I think a lot of the reason why the market is lagging, the rest of the market, is you can see it in the chart. The ADI, the Advanced Decline Index for the top 100, never stopped putting in lower highs. Last cycle, it did stop, but it did not stop until the end of 2019. In 2019 is when quantitative easing began, right here. And it really shot up right here in early 2020. So I believe the reason this cycle has felt so different for a lot of people is because a lot of people didn't actually just stay Bitcoin heavy. They were in a lot of other cryptocurrencies, and some of them did well and some of them did not. And now they find themselves, 2-3 years later, and they're like, well, crap, I could have just sat in Bitcoin and outperformed that altcoin by 200%, right? Lesson learned for next cycle. And so I guess the question is, well, when is this going to change, right? I mean, to some degree, Bitcoin dominance goes down, right, in post-halving years. And I would argue that by the end of the year, there's a good chance, not necessarily it has to be like this, but there's a good chance that by the end of the year, Bitcoin dominance could see some lower values than it is right now, right? But you could also argue that in order for that to happen, quantitative easing would need to come back, or at least quantitative tightening needs to end. I used to say that you need QE for dominance to top out. But if you think about it, in 2017, dominance was dropping and the balance sheet was basically just flat. I mean, if anything, it was going down, but very, very, very slightly. Not really much to even notice on the chart. Nothing compared to this, right? It wasn't until it really started to go down that's when Bitcoin dominance went up. And so here, it's been going down. And Bitcoin dominance has really not stopped going up. But I guess this is the issue. And I'm going to be really interested to hear what Powell has to say next week. Because in order to end quantitative tightening or to begin quantitative easing, there needs to be a catalyst for that, right? You're not just going to, I mean, again, maybe they're going to, Powell says it's not political, but I don't know. I mean, I don't know if they will, go back to looser monetary policy based on newer political pressures or not. I have no idea. But you would think in the context of inflation going up, right? You would think that with inflation kind of inching higher here, right? 2.4, 2.6, 2.7, 2.9, right? You would think with that, they're going to be very slow to want to really introduce quantitative easing. So then how do you get quantitative easing, right? How do you get the end of quantitative tightening? I feel like you'd have to get a scary data point, And when you think about data points that you would get that affect what the Fed's going to do, there's two types, right? There's inflation and there is the labor market, right? So what would have to happen for the Fed to get really dovish and want to start money printing? If it's coming from the labor market, it would have to be a really bad print, like a really bad print, where the unemployment rate is really starting to shoot up. If you look at, and by the way, here's the thing, right? It's sort of like the thing we've talked about before. Like if you're lost, like, why does this matter? Again, no one knows where the market's going to go. I mean, last year the market started going back up in February. So let's hope that the market goes up in February and makes another move higher. There's always a chance that it could do that. There's a chance that if it does do that and it goes up high enough, that could be a major top. There's a chance of all sorts of things, right? There's a chance of correction as well. You can't know. So it makes sense to figure out, if you can't know, how do you maximize your risk-adjusted returns, right? And that was why it was just be Bitcoin heavy until dominance says 60%. So that was the purpose behind it. From the labor market perspective, in order for them to want to print, you have to have a scary data point, right? You have to. Now, if you go look at the unemployment rate, it's not like it's not going up. I mean, it is. And if you look at a 3-month estimate of it, one of the things you'll notice is that it also stalled out in Q4 of 2023 and then went higher. Right now, it's kind of stalled out here. So if the unemployment rate starts to move back up again, right, early this year or anytime this year, that could spook the Fed. That could lead to quantitative easing. And then you might get to a different part of the cycle. But here's the thing, right? I mean, again, if you look at, here's an interesting way to look at the market. You guys are fully aware of the yield curve, right? I mean, I don't think I have to tell you guys, but the yield curve, Treasury yield curve, is mostly, uninverted at this point. And if you look at it, you can see this is what it looked like when it was inverted, and now it's uninverted. You can see this better if you just look at Treasury yield spreads, right? So it has uninverted. At some point, typically, after uninversion, you do get a recession. Now, it doesn't have to happen immediately. Sometimes it takes a month. Sometimes it takes 12 months. Sometimes by the time it uninverts, you're already in a recession. So it's not like there's like a rule that you have to follow with it. It's just sort of a warning that, something's probably coming at some point. But that doesn't mean you can't make money even during that process. But here's the thing, because the Treasury yield curve has been so useful in terms of identifying when economic downturns occur, I like to look at the ROI of something after yield curve inversion. But in this case, not of the markets, but of things like the unemployment rate and inflation, right? So if you look at the unemployment rate after yield curve inversion, this is what it looks like so far for this cycle, right? Now, what does it look like for the last cycle? Now, we're going to exclude the pandemic because that was a black swan, right? I mean, that was just straight up. And if you just want to know what it looks like, right, it looked like that, right? We're going to ignore that because it's just an outlier. If you go to the cycle before that, this is what it looked like, right? This was the unemployment rate after yield curve inversion, right? And so if you get a scary print, right, in a few months, that would likely cause the Fed to begin quantitative easing. And now, I know this looks scary, but bear with me for a moment, right? If you look at the .com era, the unemployment rate, it actually kind of leveled out around this time too, and then it only marginally went higher a little bit later on. If you look at the one from 1989, you can see that it kind of started out a little bit at this point and then got a little bit of a move higher and then fell back down. And if you go to 1981, you can see that's what it did. And if you look at 1980, right, I mean, you can kind of see, you can go through the cycles and see what was happening with the unemployment rate in each cycle. And sometimes it went up and then just kind of leveled out around this time and then eventually fell down. Other times it went parabolic. Now, if it goes up a lot in a very short period of time, it would spook the market and it would likely introduce quantitative easing, right? That's what would likely happen. So that would be a way you get QE, but you would need something to spook the market first. If it doesn't come from the labor market, then maybe it would come from inflation. But you'd have to think, like, how would it come from inflation? What does that even mean to spook the market with inflation? If inflation starts to go back up, it wouldn't make sense to start QE, right? Because they don't want to, throw anything on the flames and make it worse. So it's almost like you'd have to get a really bad data point to the downside with inflation, where they would start to worry about deflation, which again, at this point, doesn't really seem like the most likely outcome in the short term. I'm not saying it can't happen, just doesn't seem like the most likely short-term outcome. And if you look at inflation over prior cycles, right, here's what it looked like in the financial crisis, right? It was dropping, and then it got a big move up, and then it crashed, right? There was a big deflationary crash during the financial crisis, and you can see it right here. Deflationary crash. I know a lot of people would love for prices to go down. Who wouldn't? The issue is that if you're ever in an environment where prices are dropping, it's usually really, really bad for the stock market, right? So it's kind of one of those things where, like, if you ever got that, you might have cheaper prices, but the markets are probably not doing so well. This is what it looked like in 1989. So, I mean, all in all, the Fed hasn't done a bad job of getting inflation back down. I mean, the question is can they stay the course long enough to make sure we don't get a secondary wave? And what I mean by that is, if you look at the inflation data back in the 1970s when we had these major peaks, there was plenty of times where it bottomed out, around 2%, 3%, and then just went into another wave of inflation, right? And if the market gets a big move like this, where it goes from 3.8 to 4.8 in a single month, that's what would spook the market. But again, when that happened, it became apparent back then that, the Fed was going to have to raise rates even more, and then it was going to go into a recession. So in order to get quantitative easing, something has to happen, you would think. I suppose it's possible that Powell could just come out and say they're going to end QT and come up with some random reason to sort of fall back on. But you would think that if he sort of sticks with what he said, they're going to try to stay the course. And with inflation going up, it's not necessarily the most likely scenario for them to end quantitative tightening, but anything's possible. Anything's possible. And so that's why I'm saying in 2025, I would say let's not be so deterministic about Bitcoin dominance, but be more open-minded to where does the data actually take us. Being fully aware that at some point this year, there's a good chance dominance will go down. So here's the thing, right? In order for QE to begin, something bad would probably have to happen, right? Because they're not going to start QE if nothing bad is happening, more than likely, because they don't want to run the risk of inflation. So then you could still argue that having majority Bitcoin is still not like the worst way to go. That doesn't mean that altcoins can't do well. In fact, we've talked about plenty that have, right? We've talked about, Aave Bitcoin and XRP Bitcoin, they're double bottoms, right? And even Sol Bitcoin had one in 2022 that I was not even willing to acknowledge because I was just, right, only focused on Bitcoin dominance, right? So the Sol Bitcoin bottom, it was a nice double bottom, but I was just so focused on Bitcoin dominance going 6%, I didn't even really acknowledge it, right? And that was my own fault. We all make mistakes. So I'm not saying you can't make money on the altcoin market, and it's true that the further you go in to the post-halving year, there's a good chance dominance will drop. But there's also this idea that, until QE begins, you could still have, a Bitcoin dominance level that's not as low as people really want it to be because QE never came back. So that's why, right, even in 2025, having, whatever you want to have allocated towards crypto, having more in Bitcoin than in everything else tends to work out pretty well. And even if Bitcoin dominance does go down, Bitcoin USD would hopefully do okay, right, in post-halving years. So I think the one thing to consider here is that, Bitcoin obviously still gives you exposure to the upside. So let's say that if there is another rally, right, let's say that Bitcoin USD gets another rally in February or something. Let's say, and I was looking at this other thing earlier. I'll mention it here just in case you're curious. But I was looking at this and I was like, oh, it's kind of interesting that basically all these prior tops by Bitcoin have occurred when the 200-week SMA crossed the prior all-time high, right? So when it crossed the all-time high, that was when Bitcoin topped. When it crossed the 200-week crossed the all-time high here, that's when Bitcoin topped. In last cycle, when it crossed the all-time high, it was a little after Bitcoin had topped, but only by a few weeks. Only by a few weeks. So I thought maybe that would be interesting to watch this cycle to see if that also plays out again in a similar way. But I digress. So like if Bitcoin were to follow, what it did last year, where it consolidated in this phase, in the December, January phase, and if it gets like a big move up into March, if it does do something like that, I don't want to say it has to be the most likely outcome, but there's a chance it could be a cycle top depending on how big the move is. Like if it's a major move, like basically if it's like a really big move. And the only reason I say that is because as you get out further and further into this year, we might have some labor market issues. So that's certainly one outcome. So obviously if it goes up, having Bitcoin would give you exposure to the asset class. It gives you exposure to the upside. It also minimizes your downside risk. And if we're unfortunate and something bad happens that causes the market to drop, and you deviate from what you normally do because of a growth scare or something like that, then while Bitcoin would drop and it would really suck, it still probably wouldn't drop as much as the altcoin market, right? So you could still argue that Bitcoin still gives you that exposure to the upside. It still minimizes your downside. And it's really interesting because you can see it across the board. I mean, Bitcoin did not have a large correction here, 17%. But if you look at the altcoin market, right? If you go look at the altcoin market, it dropped more, right? It was 26%. So that's what I mean when I say Bitcoin gives you exposure to the upside, but also minimizes your downside, right? So if there is a drop, Bitcoin probably won't drop as bad as the altcoin market. But here's the trick. And I don't know if this is going to happen or if you're just going to get sort of like a rally into a blow off top and then it's just over. But if you were to get a growth scare before the actual end of the cycle, that would probably be enough to induce quantitative easing, right? Quantitative easing. And from that drop, you would then likely see alts outperform Bitcoin because QE is back and Bitcoin dominance would likely be in a downtrend. But it's this nuance where last cycle dominance did not top until QE began, and QE never began this cycle. But in order to get QE, you have to have a bad data point. If you get a bad data point, it likely means the market sells off. So it's this kind of this cat and mouse game where no one really knows how it's going to play out, but having that exposure at least has given you exposure to the upside. And that was why it made so much sense to just keep your portfolio Bitcoin heavy, at least until Bitcoin dominance hit 60%. Now, generally speaking, when you look at Bitcoin dominance right now, I suppose the question is as well, has it topped, right? Has it topped? Or is there a chance it could go higher? For me, for my deterministic, stubborn self, I saw it through to 60%. I'm happy with that. I don't feel like I need to, at this point, stay deterministic on it, right? As far as I'm concerned, 60% is good enough for me, right? I don't feel like it needs to necessarily go higher to make the asset class healthier. But it doesn't mean it won't, right? It doesn't mean it won't. One of the reasons you might argue is like, well, if dominance last cycle went to 73%, why can't it go there this cycle? Well, I think what's happening with Bitcoin dominance is that it's converging to wherever it's going to be for the most part, right? It's putting in higher lows, but maybe it's also putting in lower highs. Now, do you draw it like that and say the lower high is already in? Do you draw it like that and say it could go higher? That's a tough call. But I think it's doing something like that, where it's converging to whatever it's going to be at, right? That's what I think is happening. And the reason why it's probably not going to go back to 73 is because the stablecoin market is a lot bigger today than it was back then, right? I mean, if you look at USDT dominance, it's at like 4%. Back then, it was hardly anything. And so I think that makes a difference as well. But there's also a part of me that looks at this and I'm like, technically, are we just comparing it like this? Like, are we looking at it here and saying that? And then you have sort of a capitulation down, which is that, and then it just kind of like bounces around in here. Like, what if we are just repeating this area? And I'm trying to think, like, how does that make sense, right? How is there a situation where this is the same as this? And my gut says it's probably not like that, you know? And the reason I say that is because if you look at Bitcoin dominance plus, if you look at it like this, if you look at Bitcoin dominance plus ETH dominance, plus USDT dominance plus USDC dominance, you can see that, it's kind of already returned back to where it normally goes. Now, it did have this major spike, and maybe it gets that again, but it already had that move, right? It already went up to 82%, and I told you guys back in 2022 that this metric was likely going to go up to 82%, and that's basically right where it went, 82%. So for me, like, I don't feel like it needs to go higher, but if you were to tell me that it did go higher and figure out why, then maybe you would have to think of it like this, where it's just an oscillator. And this is sort of like a period where it doesn't go anywhere for a while and it just keeps bouncing around before then eventually breaking up again and surprising everyone, probably including myself at that point. But I don't want to completely dismiss that idea. Because who knows when QE will return. And I think we all think it's going to return this year. But what if it doesn't? And the cycle just goes on. And there's obviously always talk about a left translated cycle. What happens? What would dominance do in a left translated cycle, where the peak occurs a lot earlier in the post-halving year than it normally does? Normally it occurs in Q4. If it occurs a lot earlier in the year, what would Bitcoin dominance do, right? If it's left translated, if the cycle doesn't have time for altcoins to get all the way back down here, would it just kind of drop a little bit and then go back up into 2026? Like, I don't know. I mean, I'm just throwing out random ideas, but I still, for now, I'm sticking with sort of the lower high idea and the higher low, and it's basically just converging into whatever it's going to go. What's interesting is every post-halving year, the narrative changes, right? Everyone's focused on Bitcoin, while the people that know what they're doing focus on Bitcoin in the bear market year and the pre-halving year and the halving year. And the people that pretend like they've been around for a long time, but in fact, they just kept calling for alt season all those years. That's how you know. By the way, that's what I think. I mean, if you look at a lot of these influencers, that's how you know if someone's really been through these cycles. If they spent all of 2022 and 2023 and 2024 calling for alt season and telling you why Bitcoin dominance was going to go down, they probably haven't lived through that many cycles. But if they were bullish on Bitcoin dominance, then there's a good chance they actually lived through prior cycles and they knew what it was like and they saw what happened. I feel like that's how you can tell the difference between someone who just is blowing hopium because they're paid to promote something versus someone who's actually trying to say, look, like, whether you like it or not, this is probably going to happen. But in this case, you can already see things, right? That are the narratives are shifting. It went from a strategic Bitcoin reserve to now we're talking about a digital asset fund or digital asset reserve, right? I mean, that doesn't always happen, but that always happens in another way, right? The narrative starts to shift in the post-halving year, where we go from focusing on the things that are more important to the frothier stuff. And as that frothier stuff bubbles to the surface, the money that was being directed towards Bitcoin gets diverted into frothier things. And so then eventually Bitcoin gets a correction, a bear market that usually starts in the post-halving year and goes through basically the end of the midterm year. Now, so far, we've always been fortunate to have a right translated cycle, and that's hopefully what we get again. But you always have to be open-minded to it occurring earlier in the year. In 2021, the final peak did occur in Q4, but the main peak that was more euphoric was in April, right? Which is only 3 months from now for this cycle. So you always have to be careful. I mean, it can always occur a lot earlier than you think. I think the April top caught a lot of people off guard. So, in this case with Bitcoin dominance, you can already see the narratives are starting to bubble, to, no pun intended, right? To kind of divert attention away from Bitcoin into other things. And so as the year goes on, you're probably going to see that happen more and more and more. Now, there's one interesting thing I wanted to talk about here, and that's alt Bitcoin pairs. So this chart right here, if you're new, is total 3 minus USDT divided by Bitcoin. Now, I think you should save this chart to TradingView, and you should look at it every single day. Every single day, I think you should look at this chart. Why is that? Well, the argument goes like this, and here's where, here's kind of an interesting thing with Bitcoin dominance, okay? Individually, altcoins tend to be oscillators at best against Bitcoin. Now, you can find some alts that are not oscillators, that have actually been in an uptrend against Bitcoin for more than one cycle. I know if you're a Bitcoin maxi, you're going to be like, no, that's not true, but it's actually true. There are some that have gone up against Bitcoin for more than one cycle in a row, whether you like it or not. Don't take it up with me. Take it up with the data. There are some. But the vast majority of altcoins bleed against Bitcoin. And so collectively, if individually, like 99% of altcoins are oscillators at best against Bitcoin, then it would make me think that collectively, they're also oscillators at best, right? The interesting thing is that they never actually went to the range low, right? Now, when they went here at 0.34, I made a video on Bitcoin dominance because Bitcoin dominance hit 60%. And I said, it's time to diversify. You know, there's some different alts. There looks like they're double bottoming against Bitcoin. It's okay to diversify. And we had a hell of a rally by alt Bitcoin pairs. And it might not be over, right? It might not be over. But there is something that's bugging me a little bit, right? And that's this right here. The fact that all it did so far, all alt Bitcoin pairs did so far, was just sweep the high from exactly 1 year before. This high was December of 2023. This high was December of 2024. All it did was sweep the high. And all it's done since then is bounce around. Right? That's all it's done. In 2021, we got this. But we got that after alt Bitcoin pairs had already gone to the range lows. And so if you're looking at the chart and you're wondering what the hell is going on with your altcoin, why every time you wake up is it bleeding against Bitcoin, you know, and it just can't seem to really durably outperform Bitcoin for more than a couple of weeks, the reason might just simply be they never actually went to the range lows, right? That could be the reason. When you look at this chart closely, you'll notice something. Now, honestly, when I used to look at this chart all the time. I still do. An unhealthy amount, by the way. You know, a lot of times we focus on the most recent cycle because that's what's fresh in our mind. But as we showed, when you go look at crypto, when you look at like the ROI from the bottom, this looks a lot more like 2 cycles ago than last cycle, right? I mean, it looks a lot more like that one. So if it looks a lot more like 2016, 2017, then why not look at Bitcoin dominance through the lens, or alt Bitcoin pairs through the lens of that? And unfortunately, we don't have a lot of data because this only goes back to July of 2017. But you'll notice that the week of October 17th, let me get the actual day when it bottomed. So we know. So we're not just guessing. When did it actually bottom? November 2nd of 2017. So for one moment, I want you to think about this. In 2017, which a lot of people are saying this is, 2016, 2017 cycle is like the 2024, 2025 cycle, right? But in 2017, November 2nd, alt Bitcoin pairs were at 0.25. That means the altcoin market cap collectively was 1/4 of Bitcoin's market cap, which is typically where it bottoms. This was a major drop below to 0.18. It tops around parity with Bitcoin. When the altcoin market cap is essentially equal to Bitcoin's market cap, the altcoin market tops and Bitcoin dominance begins its uptrend. But I look at this and I'm like, when I said I thought Bitcoin dominance would go to 60%, I thought that it would, but I also thought that we would see alt Bitcoin pairs at least a little bit lower. At least a little bit lower. One of the reasons why Bitcoin dominance was able to go to 60% without alt Bitcoin pairs going lower, despite the fact that stablecoins are a thing now, more a thing than they were last cycle, is because ETH Bitcoin actually went to 0.03. Right? I mean, it hasn't been doing that well. But I look at this chart and I'm like, well, is there a world? Like, is there a way that we still see alt Bitcoin pairs go to the range low before they actually go back up? I don't think they necessarily have to. And I want to be clear. Like, it's possible that you get another alt Bitcoin rally. But the one thing I've noticed with charts like this is that if you don't go to the range low, then you're less likely to go to the range high, right? And that's the key thing. It's not about it can't go up. It's just that if it does go up, there's a higher chance it won't make it to here unless it goes here first. Every time, over here, anytime it rallied, it never made it anywhere until it spent a lot of time down here. So I do wonder if that is one of the reasons is keeping alt Bitcoin pairs struggling, is because they truly never went to the range low. But when you look at the chart closely, you'll notice something about alt Bitcoin pairs. I think they're in an expanding, broadening wedge. I think that's what the gurus call it. Honestly, I don't really know. It sort of looks like it's just expanding out here, but I'll leave it to the experts to tell me if I'm right or wrong about that terminology. But it looks like that to me, right? And it kind of looks like it's chasing each season, right? When it goes up, people say alt season. When it goes down, people say Bitcoin season, and alt season, and Bitcoin season, and duck season, and rabbit season, right? And alt season and Bitcoin season, right? And it never actually goes to the range high or the range low, so it constantly leaves people wanting more. And they're like, well, that's not alt season. And you're right. You're damn right it's not alt season in 2022, 2023, and 2024 because Bitcoin dominance was going up, right? Alt season is something that happens in post-halving years. Yet the gurus who spent the last 3 years mocking Bitcoin dominance and publicly dunking on me, good luck convincing them to understand that. They're never going to understand it, but I guarantee you they'll be here to show you the altcoin tomorrow that they were paid to show. I guarantee you that because I get the same offers that they do. I just say no. So you have to be careful with people that just kind of mock it because a lot of times it's in their interest to mock it. In this case, what if it plays out like last year? The only way it's going to play out like last year is if quantitative tightening doesn't end anytime soon. So the optimistic scenario for my degens out there, right? The optimistic scenario for you is to see if Powell throws you a bone next week and ends quantitative tightening. If he does, then this might be as low as all Bitcoin pairs go this cycle. And they might go back up. They might just not make it back up to the top of the range. They might just kind of fall short of it. Maybe they come up to like that level or something, right? Maybe they go up to like 0.56 or 0.6 and then they fade again. And it just ends up being a macro lower high, right? And it's just more drawn out than last time. Because remember, last cycle, quantitative tightening ended in September, right? It ended down here. Maybe quantitative tightening won't end until they're down here, right? That's kind of a crazy thought, but maybe it's true. But if Powell just says, screw the degens, right? They're not going to throw us the bone. What if it just repeats last year, but a more volatile version of last year? So what I mean by that is if you were to take a bar pattern and then just kind of take what happened last year and make it a more volatile version, right? So essentially stretch it out. What if it just does that, right? Where it got this bounce up and then it bleeds back down and then it bounces and it comes back down. And then you get down here and then it finally goes up. And maybe it goes down to the range low. I don't know if it actually has to go to 0.25. You could argue that if you include USDC in this chart, it wouldn't have to go that low. It would only, or you would argue that it's already below 0.44 now. Let me just pull it up. So if you add in, right, if you go over here and you add in crypto cap USDC, you could already argue that it's at 0.42 and it still needs to go to 0.25. So it's possible that this number is already 0.42. So if it goes to 0.29, that's actually 0.27. And that's within striking distance of 0.25, right? No one's going to fault you at that point. And if it goes down there, it'd probably just be a wick. So, you know, there's part of me that wonders if quantitative tightening just keeps going on and Powell's like, you know, we're not gonna cave with inflation going up, and all Bitcoin pairs just kind of do this, where they, you know, maybe they bounce around for a little bit, but by the time you get out into the dog days of the summer, like last year, they just kind of come back down here, and then October, November, they capitulate down like they did right there in November of 2017. And everyone really gives up and they're like, what in the hell is going on? And then maybe that's where they bottom before they get a move up. What's really interesting is you could look at that in two ways. When it hit that level in 2017, it was right before a massive alt season. When it hit that level in 2019, that was when QE began, but that was when a bear market began that actually led into a recession. So this is why I said back when dominance hit 60%, I'm like, it doesn't make sense to wait until QE to diversify into altcoins, because there's a chance that when QE returns, the cycle's over. You know, I mean, last time when when it began, we entered into a 9-month bear market that included a recession. So that's why when when it hit 6% dominance, I'm like, guys, it's time to diversify now. You don't want to wait until QE because there's a chance the cycle's over at that point. Now, hopefully the cycle's not over at that point. I would hope that if it does this, you just get a massive rally in November, December, just like you got in 2017. But there's a reality that the only way that you get an alt season like that is to come down here first and give a reason for QE. To me, it would seem like as long as they don't wait too long, if they implement QE in the post-halving year at any point, as long as the unemployment rate isn't absolutely awful, there's a good chance it would lead, you know, to an alt season. But if they wait too long until it's too late, then in 2019, when they began QE, you know, crypto struggled for a while. Now, the S&P did okay, and you could argue that Bitcoin's more closely related to the S&P than it was back then thanks to the spot ETFs, but it's at least something to consider, right? So I do wonder if that is an outcome that should be on our radar, and if it's worth considering. For me right now, I will say this. I will say it's a consideration as long as quantitative tightening continues. But I would argue that we reserve the right to say this is not the most likely scenario if at any point between now and November, QE returns. Does that make sense? So again, it makes sense to be open-minded to Bitcoin dominance going down this year, but as history has taught us, there's a chance that alt Bitcoin pairs could still go to the range lows, you know, even as late as the end of this year. There's a chance. And you can see this pattern on some alts, this expanding, broadening wedge. You can see it. Similar pattern on some alts. Cardano is one of them. Right? If you look at ADA, you will see it. I mean, it's not exactly the same type of thing, but you can kind of see it. I did the same thing last cycle. Eventually, it broke down before breaking up. More than 50% of these patterns break down first. Well, in Forex, like 54%. Last cycle, it did break down before it broke up. It's just something to consider, guys. You know, I mean, I feel like I feel like we're chasing narratives here, right? When it comes up here, everyone's talking about QE, it never happens. And then eventually, by the time you get out into the summer, it just bleeds back down. If this, you know, Cardano, if it's gonna do anything, it needs to be able to break out of this trend line like it did right here. If it can't do that, by April, by March or April, then there's a good chance it could just bleed back down, right? So watch this stuff. You know, I don't know what's gonna happen. Hopefully it just breaks out. But I know that in 2022 and 2023 and 2024, everyone told me it was going to break out, and it never did. And I contend that it never did because QE never returned. The labor market became an issue up here. That was when the unemployment rate started to go up. So if you see the same thing again, you know, and alts come back down, that could kickstart quantitative easing. Just like, you know, quantitative easing started as it came back down right here. You see? But a lot of alts are following that pattern. I mean, you know, you ask me like why Ethereum sucks so much. It's like every time Ethereum's allergic to 4K. Every time it goes above 4K, the whole market goes to you know what. Look at its Bitcoin pair. That's the secret. You don't have to wonder why ETH USD sucks so much right now. Just look at the Bitcoin pair. That's why it sucks. Bitcoin, the ETH Bitcoin pair never stopped going down. And, you know, I would argue there's a good chance it could bottom out soon. My worst case scenario was 0.03. And I said that back when it was at 0.08. People said I was crazy for saying it could go to 0.03. Now, people are praying that that is the bottom. I don't know when it's going to bottom. I said it could bottom as late as January of 2025. Well, we're there, and I don't know. Hopefully, ETH Bitcoin bottoms soon. The only counterpoint, you know, is to say, until QE returns, there's always a chance that it could go lower. I hope it doesn't. You know, 0.03 is good enough for me, but if I'm trying to play devil's advocate, I know that last cycle, it did not actually bottom until QE returned. You see that? That's when it actually bottomed. Not before that, not after that. Exactly when quantitative tightening ended is when ETH Bitcoin bottomed last cycle. And so I just keep wondering, I'm like, you know, are we all just getting ahead of ourselves? Is there a chance where it could bounce before QE comes back, like some of the other altcoins have, and then double bottom on QE coming back? Could that happen? I think it could. But I honestly don't know. I mean, I just know that last cycle, the first bottom of the double bottom didn't occur until QE actually got back. And unless Powell starts QE next week, then, you know, who knows? But it's been a tough market for those that were not either in Bitcoin or the right altcoins. If you were in a basket of like 10, you know, sort of higher market cap alts, you're only doing well if you got into one or two of them. A lot of the other ones just haven't done that well, you know? It's kind of remarkable to think that Ethereum, you know, is still so far below the all-time high. And I was bearish on Ethereum, the ETH Bitcoin pair, like crazy. Like crazy. But I'm still, I mean, even though I would love, I mean, don't get me wrong, right? I would love for ETH to go home finally to the low regression band, which it never did. But it's almost like, you know, I despite that, I'm just kind of amazed that Bitcoin is sitting at, you know, 100K and ETH can't even crack 4K at this time. It just seems a little, it's like, what's going on? And I'm like, well, it's probably just QE. And that's the reason why you're seeing dominance continue to do so well. Another way to look at dominance is through the lens of dominance excluding stablecoins. Right? So if you look at dominance excluding stables, I drew this pattern out back in like early 2024 or mid 2024. I was like, it's going to come up here and tag this trend line for the third time, right? 1, 2, and 3. And it's going to hit it, and it's either going to immediately drop or overshoot it and then drop. But it's going to drop regardless. And you can see it basically just immediately dropped. Now, I was thinking that if it's going to drop, then it might not get back into the wedge. But it looks like it's trying to fight back into the wedge. And it's trying to stay above its bull market support band. You see that? It's trying. And I don't know if it's going to be successful or not. But it is trying for sure. If If Powell starts quantitative easing next week, then this very well could just be a rejection right here. If Powell says, screw the degens, then maybe it just goes back up, and maybe it like double tops or something, right? And then sort of fades. But I do think later this year you will likely see it go down. But that's a really good way to look at the market, is Bitcoin dominance excluding the stablecoin market. You know, and I mean, if you think about everything in the market, right, and where we are in terms of seasonality, you know, as we were showing earlier, if Bitcoin follows a normal right translated cycle, then it should get another move up soon, right? You can see this is a 2016, 2017 cycle, right? If it follows what a normal right translated cycle would be, it should get a move up soon. If you look at the running 1-year ROI, in order for it to continue staying at a 2x, if you think about what Bitcoin was able to accomplish last year around this time, going into February and March, Bitcoin rallied up to 70K. So if Bitcoin doesn't go to 140K by March, then it's going to fall below this 2x running 1-year ROI, right? So if you have Bitcoin and it goes to 140K, great. There's a good chance dominance would go up on a Bitcoin rally because quantitative tightening never ended. If quantitative tightening were over, I would say that altcoins could outperform Bitcoin, especially as it stalls out. But until that happens, there's always a chance the status quo remains unchanged. If Bitcoin does not get a rally into March, right, like it did last year, it's probably because of a growth scare. And if you get a growth scare, you get QE, and out of QE, alts outperform Bitcoin. One of the interesting metrics I followed is the stablecoin supply ratio oscillator. I know every time I make a video on this, like, no one watches it, but I watch this like every other day. Well, every day. I don't know why I said every other day. Look at this pattern, like double tops. If we get sort of another move here, like last year, and it puts in sort of a lower high again, that could be a significant top for the year. Maybe you get another move in Q4, but maybe you don't, right? Maybe it just ends up being sort of a left translated cycle, and it occurs a lot earlier in the year than people are thinking. But there's also cases like in 2019, just before QE began, where you didn't really get another move up. Every other one of these has, but in 2019 and in 2021, you really didn't get that secondary move up. I'm curious how this is going to play out. Watch this. If it gets sort of another spike back up to 3, like it did last year, there's a good chance that's going to be a significant level for Bitcoin to get past. It's going to be really hard for it to get past. But I would watch that. And I used this metric actually back in September to help me figure out that it looked like Bitcoin was going to continue this rally as this came back up. And I'm like, don't fight the market. If it's telling you it wants to go up in Q4, just let it. Just like if it tells you it wants to go up in February and March, just let it go and see how high it goes. Here's the thing about Bitcoin USD. And we're kind of at an interesting milestone right now, because seasonality would say it should break out, right? Everything. I mean, seasonality would say it. ROI from the low would say it. ROI from the peak would say it. ROI from the halving, right? I mean, if you look at ROI from the halving and you compare it to the 2016 cycle, it would say it. If it doesn't follow this, then it might be a left translated cycle, or it could be a scare, and then you still get a right translated cycle. But this is what you have to watch. Does it follow this or not? The way it would is if nothing bad happens. The way it wouldn't is if you get a really bad data point. So it's one of those things where it's like, a lot of people want alt season to occur where alts durably outperform Bitcoin, but the only way you're going to really get that is if QT ends. But if QT ends, it implies something bad happened where this deviates. So it's almost like one of those things of like, be careful what you wish for. If you really want QE, fine, but what has to happen for QE to return? Especially with inflation going up. So that's why it's just been so easy just to stick with Bitcoin, to say, well, Bitcoin hasn't needed QE to do well, right? Because Bitcoin is king. And if Bitcoin can't do well, and if the Fed has pushed us too far and it corrects, it's not going to go down as much as alts, but I bet you alts would outperform Bitcoin out of that drop. They would underperform Bitcoin during the drop more than likely, but then outperform it on the other side of that drop. And if an altcoin does outperform Bitcoin on a drop like that, then it's a really good sign that it's going to do really well on the other side of it, of QE. So, and I know everyone's opinionated, right? Obviously, you know, everyone wants to know what's going to happen. And we talk about, you know, the most likely scenarios, how to plan for them. But at the end of the day, it's not about predicting what's going to happen. I think a lot of people on YouTube, you know, they really pride themselves on predicting the market, and they want people to recognize that. And I fall into that too sometimes. But in reality, it's not about being right or wrong. It's just about managing a risk, because no one has any idea what's going to happen in the market, no matter how confident they seem. Anyone who's overly confident, just go look at all their past predictions and you'll find plenty that were wrong, including myself. So just remember that no one knows exactly what's going to happen in this market. If there is a drop, it leads to QE more than likely, and all it's outperformed Bitcoin for the rest, you know, for the rest of the time, however long that is. And if there's not a drop, then why start QE? You know, I think it's as simple as that. So I think we'll go ahead and wrap it up. I don't even know what I'm talking about anymore, frankly. But by the way, you guys remember the dollar? We talked about this. Many times that I say it was going to go up to 109, 110 before getting a big pullback. This is exactly where it went, right? 109, 110. This is me being like, oh, look at me, I got that right. But again, maybe I just got lucky. I don't know. I know a lot of people were very bearish on the dollar right here. And it made no sense to be bearish on it, because if the Fed's cutting and nothing's wrong with the economy, dollar needs to go up. Note that in 2017, the dollar topped out in January, right? Right here. It topped out. Maybe it goes higher, but that was the easy part of the move. Hopefully, it just goes down now, but that was the easy part of the move. If it goes up even more, well, that's where things get really kind of nasty if it keeps going up. But I think we'll wrap it up. You know, sort of summarize. Don't be deterministic about Bitcoin dominance this year. If you were deterministic in 2022, 2023, 2024, like I was, congratulations. You know, you preserved the Satoshi valuation of your portfolio better than most. Be less deterministic about it in 2025. Be more willing to adjust your view on Bitcoin dominance based on what's actually going on in the market, like in the macro side of things. You know, if Bitcoin can rally, Bitcoin's likely going to outperform alts in any rally until QE returns. If there's a big drop, Bitcoin will likely do better than alts. So be open-minded to dominance this year. Could go up at some point. It likely will go down. If it's like 2017, it won't occur until the final drop of Bitcoin dominance won't even occur until November. If it's like last cycle, it would have already started 3 weeks ago, right? Maybe this cycle will be somewhere in between. Maybe it'll happen halfway through the year or something. I don't know. But it's important to recognize that in post-halving years, at some point, the pattern of Bitcoin dominance should change. At some point this year, it likely will change, even though it hasn't happened yet, right? So far this year, dominance has gone up, you know? So at some point this year, dominance will likely go down. It's hard to know when, but there's a decent chance that it won't be a durable drop by dominance until quantitative tightening ends, and quantitative tightening might not end until there's a spooky data point somewhere that leads to a growth scare. So those are my thoughts about Bitcoin dominance. Hopefully you guys can appreciate the Bitcoin dominance journey that we've been on. And do remember, no matter what happens with Bitcoin dominance this year, don't fade dominance from 2026 to 2028, because there's a good chance dominance will go up during that time, regardless of what happens this year. And if you do secure profits with alts on their Bitcoin pairs this year, convert it, take profits back to Satoshis, or even the further you get into the year, maybe US dollars. But just remember to do that, and don't forget to do it. And hopefully we can get past, sort of the left translated cycle idea. I would love to just get past that, put it behind us. But it is still a relevant thing until proven otherwise. And I think to prove otherwise, you just need to see Bitcoin break out again. And if it can break out above 110, then it's probably just going to be like most of the cycles we've seen, where, last cycle, we had a peak in April, and then we had another one in November, but the main was in April. So anyways, guys, we'll wrap it up there. Those are my views about Bitcoin dominance, and I've even talked about how you have a plan, even though you don't know, even if you don't know where the market's going to go. But that's how you navigate the Cryptoverse, and I think Bitcoin dominance is the key to unlocking the secrets of the Cryptoverse. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.